I've been drinking water for some time, picking up the parts of all my lies. Didn't get to solve it this time. I won't have to break apart. Don't tell me why we can't collide. Nowhere to run, nowhere to hide. Don't you feel it? Don't you feel it? On the break of dawn, I'll follow you to carry on. On the break of dawn, I'll follow you to carry on. Until the break of dawn.
All right, what a start to the stream there. Got some good music there. I know there's some people who went to or who have gone to EDC as well over the weekend. So, all right. So let's bring that music down a little bit. That's very exciting. Welcome, guys. Whoa, 5 likes already. Thank you, guys. Thank you. All right. So hopefully everyone has gotten the notification that I'm live now. So let's begin. Let's begin. Alright, so as seen in the description and in the title, you guys should know that we're trying to talk about, well, the tickers from this week's CFO Swinger Watch Report. So obviously, you guys, for anyone who is watching this, who is not a part of the CFO Swinger Watch Report, I highly recommend you guys to become a reader so that you guys can understand what we're talking about, why we're looking at these tickers, and kind of get a better understanding as to where the market is at from a macro perspective and from a micro perspective. And basically, from the top-down analysis that I do every single week on the market, the overall market, and for just all the tickers that and trade ideas that I present in the report itself. All right, and all that. All those the details on how to join is through a link, all right? And you guys can find that link down below in the description box down below. Okay, very simple. All right, so first of all, let's talk about the market. So instead of going towards DoorDash first, we're gonna look at SPY. Okay, so ticker symbol SPY. So for SPY here, amazing gap down, and then absolutely an amazing move back up higher. Now, here's where things can get a little bit toppy. Okay, so as I've already indicated on all the other previous times, including last week and even last week, I've been noticing that there's been certain indicators that are showing signs that this market run up higher may be losing its energy very slowly, and today was no different. Okay, so let me actually make sure that I am able to hear myself correctly here. Okay, good. Just make sure that the replay is okay there, and let me actually lower the volume as well. We've got some dubstep in the background. It's seriously for the people who went to EDC, I think, at this point. Anyways, so based on those indicators and those indications of what I've pointed out, and if you guys want to know what those are, please become a reader of the report so that you guys can get a good grasp as to how I'm looking at the overall market and why you guys need to be looking at the market in this certain way. Okay, so today we got the same kind of similar indications as overall market breadth was kind of slow. It was sluggish. It wasn't expanding as you would expect to see when we have such great market action like this, especially when we have a very nice bullish engulfing candlestick, which is kind of crazy, right? Based on the news that we got over the weekend, on Friday after hours. And, you know, I've also explained the entire deal with the the credit downgrade as well for the US. And if you guys want to read that, please again become a reader of the CFO Swinger Watch Report. All the details are in the link provided down below in the description box. And you know, today is no different. Like I said earlier, right? It's just simple buying the dip price action, and these are all the late buyers who just have and hold this conventional idea, a pretty prevalent idea as well, that you just need to buy when the market reaches highs, these previous pivot high points, or just reaches new higher highs, or maybe even new all-time highs. I know there's still people out there, especially portfolio managers and fund managers, who have completely missed out on this rally up higher from April's lows, which is crazy to me, since they're managing millions, if not tens and hundreds of millions of dollars worth of clients' money, and they have not done a good job at this rally, right? And so these people will be waiting for the ultimate higher high, the ultimate all-time high price print of the broader markets, and that will further fuel a new all-time high move to the upside, right? We'll see consistent new all-time highs and a new uptrend in the next couple of months. Okay, now I'm only saying in the next couple of months. I'm not being a bit specific on that because I am reserving that for my readers. Okay, and for all the readers out there, I already gave you my general, a bit more specific but general idea as to how we should be navigating the markets the next 1 to 2 months. So please read the market summary section of the report if you guys have not read it yet. I don't know why you wouldn't have, but since it was sent last night. But anyways, okay, so for SPY, as long as we hold 585 this entire week, we should be good to go. But if we decide to move lower again, anytime this week, all right, and I already said this to my members as well, even today after hours, or during trading hours actually today, if we move to the downside, okay, there is a slight probability that we can come back to at least using the previous downside targets on SPY. So 585 and 574.50 as the levels of support. I believe I said this 2 weeks ago as well, or last week. I'm pretty sure it's last week. I'm pretty sure. But at any time, at any point in time this week, later this week, if we come back down to 585, and if we somehow miss 585 as a new level of strong support, and a huge amount of supply comes in, and sellers just absolutely slap the price back down below 585, then 574.50 is the next major logical level to retest and hold. And at the same time, you guys should remember from my previous streams as well, this daily 200 SMA is currently sliding up higher, right? Slowly curling up higher and sort of flatlining as well. And it's right at this 574.50 level. And I wouldn't be surprised again that we break below 585 if we see that seller activity coming back in below 585 and we push lower to 574.50. But here's the thing, right? Again, if I expect to see 574.50 being hit again, that means we will coincide with the retest at this daily 200 SMA. But at the same time, you guys cannot forget this. Simultaneously, that means that we break below the daily 10 SMA, this red line. And that will usually end up causing some descending consolidation to occur. Why a descending consolidation? Well, at that point, the daily 10 and the daily 21 SMAs will have gotten very close to the price, and we'll start to see consolidation appearing in between the area of the daily 10, this red line here, and the daily 21 SMA, this light blue line here. Does that make sense? So, you know, if you come back down to 574.50, at that point we'll be officially below and staying below the daily 10 SMA, and at that point we'll be starting to consolidate between the area of the daily 10 SMA and the daily 21 SMA. How do I know this? Well, because again, it's now 8 years. I believe it was 7+ years a couple months ago, but it is now 8 years since I've been using these SMAs, almost a decade now. So that is just from my experience of 8 whole years. of using SMAs, and that's the reason why I'm able to provide such accurate analysis when the time comes for an accurate analysis like right now. And for, well, since this April bottom so far, and well, this entire year, well, I should say since 2023, since 2022 was a bit tricky, and obviously 2020 to 2021 was a very easy time to make money. So if you guys didn't make money from 2020 to 2021, I don't know what to tell you. I mean, you can literally close your eyes and buy anything, and any of the leading stocks, and they would have gone up from 2020 to 2021. So, I can't really position myself and say that, hey, my analysis was correct when 2020 to 2021 from just because, well, we have a lot of, the Fed support helping the markets during, again, we didn't really need perfect analysis from 2020 to 2021 to have a successful trading journey and year. So anyways, guys, that's my little spiel there and a little tangent. But that is my overall analysis and update on SPY based on today's price action. So let's go ahead and take a look at DoorDash. This is our official swing trade idea for this week. Okay, and basically, if you guys have not looked at the analysis given in the report for DoorDash, I don't know why you wouldn't have, since it was sent out last night. Please make sure you guys do that. Okay, I highly recommend you guys to read the actual report on DoorDash. The top to bottom or top down analysis is absolutely on point for DoorDash, so please read it. Okay, now from a technical perspective, the technical analysis was also very on point because, well, I give you guys these two entry points, and the first entry point was at a bounce on this level of 199.50, this whole number level of 199.50, and guess what? We also held 199 as a low today. We ended up opening up right at that 198.78. If you just want to round up, that's 199. And we're able to move back over this whole number resistance level sitting at 199.50, which is amazing. That simply shows that buyers are still very much present on DoorDash. And even better today, we're able to push up higher and break over the previous high of the day. So last Friday's high of the day at $202.63. Again, the high of the day is at 202.63, right? $202.63. And we blew past that, and we ended up with a new higher high of $203.42. Now, why is this important? Well, again, it just simply shows that buyers are willing to hold this 199.50 resistance level as a new level of support. But then again, okay, I cannot disregard the overall market action. Right, the market action also allowed DoorDash to stay relatively strong today and allowing it to make a new higher high. But even with that in mind, even with the fact that we had help from the market, you guys have to remember, DoorDash has held relatively strong during the entire market craziness that we had since the beginning of this year. Well, since around mid to late February when we began to see that tariff news coming in, right? And DoorDash was relatively quote-unquote safe from the overall tariff news because it didn't really matter about these tariffs for DoorDash, since they're just delivering food, right? But now, obviously, from a growth perspective regarding the share price, we need to take a look at how DoorDash is going to operate, how well they're going to operate regarding the growth implications that we could have from these tariffs. So that's the major concern for me from a macro perspective. Again, this is a macro perspective regarding DoorDash from its growth perspective as well. So again, DoorDash can become a little bit snubbed for a longer term uptrend if we start to see growth concerns coming out of the consumers, the people who are delivering food right to their doorsteps, as people become a bit more, I guess, frugal compared to where we're at now, since consumers have already begun to really pull back on discretionary spending. And again, I would have to put DoorDash as a type of consumer discretionary spending, right? It's not staple, right? We don't need DoorDash. We don't need to have food delivered to our door, but it's that convenience factor, right? And so it's it's something that people really don't need, right? It's more of a want, right? It's more of like what's the word here I'm trying to say? It's a freedom. It's a freedom of convenience, right? It's a freedom of choice of convenience, right? To be able to buy food and have that food delivered to your front door, right? Rather than you stepping out, going to your car, wasting more gas, driving your car or your money, right? And getting that food, right? So, it may, DoorDash may not even see any type of that growth concern or any type of consumer decrease or consumer traffic onto their website or app, depending on how much consumers are willing to give up on their discretionary spending when it comes to food delivery apps and food delivery spending. So, that's kind of the reasons why I chose DoorDash, because again, the initial reaction to tariffs and the overall market action, DoorDash really, again, didn't do that bad, right? I mean, it came back down to retest this daily 200 SMA, but it held it very, very well. And again, yes, we can attribute this hold largely due to and thanks to the overall market action, but just take a look at the overall move here, right? I mean, this is not that bad, right? Yes, it's a negative 27% move, but if you take a look at that percentage move down and take a look at the overall chart, I mean, come on. I mean, this is a little tiny blip on the chart. And this clearly indicates that DoorDash has a good, strong grip on the bullish investors and traders. And it seems like consumers as well, as they continue to spend on the food delivery business, right? So again, for DoorDash, I am still very much looking for a very nice week with DoorDash. I currently have the vertical debit spreads that I've already outlined in the report. So again, if you guys didn't get it, I mean, the entire trade idea was in the report, and that's kind of the entire purpose to give you guys the entire trade idea on Sunday night, so that you guys can execute through that trade idea using my levels, right? My entry levels and obviously the exit levels and whatever stop losses that you guys feel comfortable choosing. So that's it for DoorDash. But yeah, I really think DoorDash overall, as a summary here, is very underrated. It's not even overrated yet, right? I really don't think that yet, because again, DoorDash is still not seeing that bullish fervor that I would want to see for a potential top to form, but DoorDash has not yet seen that. And again, with this entire market of the food delivery business becoming recently financially viable as a business, it's pretty interesting to see how well DoorDash can operate into the next 3 to 5 years, as DoorDash has become one of the major leading I guess I should say an industry leader at this point in the food delivery business, because DoorDash has, I think, like 65% market share in the industry, while Uber Eats has the rest. Well, not the entire rest, but a majority of the rest of that 63% out of 100, or 65% out of that 100%. I think it was like 30 something percent for Uber Eats, and the rest of it are smaller companies. But then again, this entire food delivery industry is, I'm pretty sure it's going to be a very easy industry to consolidate. We're going to see a lot of acquisitions and mergers happening. I mean, DoorDash itself has been kind of been seeing an increase in acquisitions, and I've already given you guys the information on that in the report itself. So please go ahead and take a look at that report and read the entire top-down analysis on DoorDash. Okay, so I think it's very interesting to see how DoorDash will operate in the next 3 to 5 years. I really think that you guys should have it in your own watch lists. This is something that you guys should always have on your long-term watch lists. I mean, it's something that I wouldn't want to ignore anymore, since I mistakenly have ignored it since 2023. Unfortunately, these are one of the stocks that, well, this is one of the main stocks that I will forever remember as completely ignoring in 2023, as I was making this very nice macro rounded bottom that I've outlined in the report as well. So, I really hope that you guys can use this stream and the report itself to really understand why I think DoorDash is underrated and kind of this sleeping dragon in the food delivery business. And I think we can still achieve new higher highs and potentially go back to the all-time high levels sitting around that 220s all the way up into nearly 260s, right, as seen here by these two levels, right, 222 and 257. So yeah, I mean, hopefully this can widen your perspectives on DoorDash and the food delivery business and industry. And yeah, we're gonna go over now towards the momentum mentioned list of this week. I'm very excited. Why? Because, well, we were absolutely on point this week with, well, I should say last week, on focusing and giving more of our energy and attention towards biotech stocks. And this week, today alone, was a great confirmation of that, right? And I believe I stated this last week around like Tuesday or Wednesday, but it was a great call from me. So I will tap myself on the back, give myself a nice round of applause for myself. But I was starting to see this underlying trend occurring for biotech, and that's the reason why I gave you guys this list that's mostly consisted of biotech stocks like BIBB, Biogen. And I give you guys those specific option contracts, and we got in earlier this morning, and this is up very nicely. I'm up already. Let's see, what's the ending percentage here of return? Oh, look at that, 30% on the day. That's huge for just a entry point from today, right? 30% right after entry. That's amazing, right? So I'm actually planning on getting another layer of BIIB tomorrow. So if you guys want to become a part of that tomorrow, make sure you guys join the report, because you get automatic access to the private CFO Discord channel. Okay, that's where most of the action happens. But again, you guys can just simply read the report and choose to execute on your style, on your time, just by reading through the report, right? All the swing trade ideas and all the trade ideas are presented in the report, and you guys can choose when and how to execute those ideas. That is the freedom that comes with the CFO Swinger Watch report. Okay, the ability to have all these top-notch A+ ideas, trade ideas specifically, and having the freedom of how and when you want to execute those specific trade ideas. Okay, so BIIB, amazing. The next stock was FLGT, amazing biotech stock. Well, it's not really a biotech stock, and I gave you guys a reason why. This is more of a let me give you guys the one right here. Right, this is a I believe I said this in the CFO Discord as well, but obviously a nice entry point over 20.55 for a nice confirmation breakout. But this is also a bio stock that is mostly on the testing side of the pharmaceutical and biotech industry, and FLGT is looking very good on that aspect. Yeah, I mean, the list absolutely on point. The list from just 2 weeks ago as well. If you take a look at XLU, which I also mentioned this week in the market summary, amazing breakout over $80.55. So over this whole number level of $80.50. I mean, the defensive sectors are looking very good. I mentioned XLP2, an amazing move up higher as well. So again, overall market breadth a little bit sluggish, but we've been seeing this market movement higher being led by these defensive sectors like XLP and XLU. So these are one of the reasons why I want you guys to hedge and be careful for the rest of this week, because of these specific sectors and groups and individual tickers that I've already given to you guys, and other indicators that I've already written in last week's report. And I reminded you guys this week as well in this week's report last night. Okay, so yeah, I mean, that's pretty much it, guys. I hopefully these streams on Monday after hours has been a gift. Hopefully you guys are enjoying these. I've been getting a lot better reception on these streams after hours on Monday compared to just giving you guys the technical analysis video over the weekend with the report. So hopefully you guys enjoyed this stream. I'll see you guys tomorrow at the same time at not the same time, excuse me, at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Thank you guys so much for watching, and have a great rest of your day.